Folks, this is Victor Cuevas with Victor for Advice, and I wanted to shoot a video to give you my thoughts on what's going on with the stock market and with the coronavirus situation. It's March 16th, a Monday, and just about an hour ago or so, I was listening to the National News Conference that President Trump held. Just keeping up to date on everything that's going on with that. It's part of my job, it's what I do. I've been in the financial services industry for 25 years, so I need to know, keep on top of things. But I just thought it was time for me to make a comment on what's been going on, because we're down 30%. I mean, just like that, folks, the market is down 1/3. Lost 1/3 of the market cap in the stock market. That's huge. That's huge. The largest percentage drop in the market since Black Monday of 1987. And before that, the largest was the stock market crash, the late 1920s that led to the Great Depression. Now, what does that all mean? Well, there's a silver lining in the fact that the fundamentals of this economy before the coronavirus made its debut on the international stage is very, very strong. This president came into office and he made some drastic changes. Even though we're a global economy, he restructured the trade deals to make everything work in America's best interests. Changes in regulation, other things he did with businesses. And just like that, we literally have, or had, the strongest economy we've ever had as a nation. While the rest of the world, or not the rest, but a great part of the world is in a mild recession or not doing that well, we're hitting on all cylinders. Unprecedented, incredible. Stock market soars almost to 30,000. Then the coronavirus comes out, and just like that, things change. Which is one of the big reasons why I tell people that they don't need any of their nest egg money in the stock market. And if they do, fine, but only a small percentage. I'll get into that here in more detail in a few minutes. My prognosis for this market is that it's going to recover a lot quicker than it recovered in 2008, which was a few years, quicker than it recovered in 2003. It took 2 years to recover from 1987. It's going to recover quicker than that. And it's going to recover quicker than it did during the Great Depression, because that took, I think, 20 years for the market to recover from that fiasco. Why? Because the fundamentals are still there, folks. I mean, think if we'd have been on rocky ground when this thing hit, I'd be a lot worse. But the fundamentals are still there, and as soon as the coronavirus scare blows over, the stock market is going to go back up like a rocket. The stock market wants to go, economy wants to go, and it's going to go. But we just have to wait for this thing to blow over. Everything that I've read and watched on the news about the coronavirus, I don't see it personally as any worse than the flu. The flu kills tens of thousands of people every year. On a regular basis, that's just the way it is with the flu. And when you look at the people that have died worldwide, I think that people die from the flu every year that have died worldwide so far from the coronavirus. Now, here in the United States, we're on the way up. We're going to get more sick people before this thing peaks. because it's just really start to go. I live in Alabama, and up until maybe less than a week ago, we were one of 3 states that didn't have one victim of coronavirus. Now we have 22. And in Lee County, where I live, which is the home of Auburn University, we just had our first one diagnosed a couple of days ago. And she's an employee at our regional medical center. So there's someone running around in our county with the coronavirus that went into the hospital and was treated for whatever. Maybe they didn't even know they had coronavirus. And now we're out there. So, look, I'm still going to the stores. I'm still going to the restaurants. I'm not going to be shut into my house. I'm 66 years old. Technically, I'm in a high risk, but I've been in health and fitness all my life. I supplement every day. I have an extremely strong immune system. I've never been sick a day in my life. I had the flu when I was a child. Other than that, I've never had a disease, and I never had anything other than the common cold. Now, it doesn't mean I'm not taking precautions. I'm continuing to take my supplements, my green drink, my superfood drink, my loads of vitamin C and other antioxidants, and my regular supplements to keep my body strong inside and out. I eat clean, and I encourage all of you, and I take the precautions of when I go out in public, I have my sanitizer and everything with me, so, I don't spend too much time. I work out of my house, so it's not like I'm out there with employees every day. But I've been driving around town. There's still people going to the restaurants, still people getting their cars worked on, and I went into Office Depot to get supplies. There's still people in there shopping. So we're not panicking around here. So don't panic. I know you're hearing that everywhere. But look, just take care of yourself. We're going to get through this thing just fine. And then when we're over this scare, could be another 2 months, you're going to see the stock market start coming out of this hole. But I want to take this time to remind you of what can happen to your nest egg when you have it all in the stock market. Now, I've been in this business for 25 years. I've had all these securities licenses. I used to be an investment advisory representative, which means we call a Series 65 license, which I gave advice. I was a fiduciary, and I could charge for my service. I collected a fee for your retirement money being under my stewardship, so to speak. But I never managed the money. Okay? Investment advisors like me and financial advisors, like I used to be an investment advisor, I gave up all those licenses. We don't physically manage money. So when you see these phony commercials from Fisher Investments and these other people, we do this for you. All they do is take your money and move it to a third-party administrator, and they manage the money. They're the certified financial analyst. They're the shop that has all the computers and all the wherewithal to trade your stocks and look at everything and manage your money on a daily basis. Your financial planner out there, your financial advisor, your agent, they don't do that. So, after 2008, I looked at different things, different ways to do a better job for clients, for those clients that I did have in the market. Most of them were in variable annuities that I don't use anymore, but their money still was protected. And 2011 and other little downturns came along, and I saw that it was just all fruitless and futile. I realized that you could do just as well taking your money and put it into the S&P index and just let it ride long term and save yourself some money, because otherwise you meet with somebody like me, I'm going to get paid and the third party guy is going to get paid. So you're looking at 2 to 4% of your money gone. And that comes out of your nest egg. Okay? So I realized I had to do something different. I just was at a point in my life where to see if my clients' money go down even 10 or 15% hurt me. I wasn't going to do that anymore. So I left that world and I just work in safe money. And that's what I want. I want all of you to look at more than ever before. Again, look, we're going to get through this coronavirus. The stock market will return, I believe personally, return a lot quicker than it ever returned before, because the fundamentals of our economy are so strong and so solid that we're going to come zooming out of this thing. But again, you don't need to have most or all of your money in the stock market. You don't need to have a small portion of it. Look, with safe money, your money can grow nicely over your lifetime. Never lose a penny, and retire with your nest egg intact and have an income for life. No stress, no worries your whole life. If you want to be in the stock market, if you're in your 20s and 30s and you want to go 50%, that's the most. Maybe 30%. If you're in your 40s and above, you don't even really need to be in the market. Okay? Now, what are the alternatives? Well, first of all, I want to congratulate all of you who have been my clients for the last few years. And your money is either in a fixed annuity, a fixed index annuity, or in a whole life insurance policy structured as an infinite banking concept policy. Whole life policy as an infinite banking policy, folks, is a policy that is structured in such a way that the cost of the insurance is minimized to the least amount that we can pay and still have an insurance policy. That's in the base policy. The vast majority of the money goes into cash accumulation. Just cranks out cash. It pays interest and dividends. Fixed annuities is where you put your money in there and you either pay you a certain amount of interest every year, or the interest is tied to an index. So when the market index is going up, you make money. Your money is not in the index. It just goes up when the index goes up. You lock it in every year. The market goes down the next year. You just stay where you're at. You never lose a dime. You're either going to go up or you're going to stay the same. Up or stay the same. You never ever have a down year. And the fixed annuities, unless you put a very targeted rider on there for pension planning, it doesn't even have any fees. And if it has the fees, any commissions or any payment that goes to the advisors or the agents, that doesn't come out of your money. So all your money goes to work. Why annuities and why life insurance? Annuities have been around since the 1600s. And whole life policies started out in the 1700s, came into their own in the 1800s. 401ks and IRAs came out in the 70s and 80s, folks. In the past, when people save for retirement, they either put it in their mattress, dug a hole someplace, put it in the bank, put it in a whole life policy, put it in an annuity, or they work for a company that provided them a pension. Very few regular folks on the street ever put their money in the stock market. So, life insurance policies that I use have been around since the 1800s. Every year, interest and dividends. The interest is guaranteed. The dividends, I can't tell you are guaranteed. But you go from the 1800s all the way to the day, the insurance companies I use have never, ever missed a year. Not ever, ever missed a year that they didn't pay interest and dividend. So you can pretty much take it to the bank, so to speak, that you're going to get paid. Again, I can't guarantee dividends. The insurance company is not going to guarantee dividends, but they just keep paying out. Annuities always paid their interest year in and year out. I personally believe, folks, there's no more reliable place, no more reliable financial instrument that you can put your money into than a fixed annuity or a whole life policy structured the right way. So when the Great Depression hit and 25% plus, more than 25% of all banks in the United States failed, when the stock market was toast, when people were losing their jobs, when they had long food lines, people were displaced, those people that had their money, remember, sometimes they couldn't even get their money out of the bank. Those people that had their money in annuities and life insurance, their estate grew and grew. Every single year grew and grew and grew every year. And at the end of it, when the Great Depression came out, they had more money than they started with. When the government needed money to finance the wars, the insurance companies were there to borrow money. Insurance companies are the greatest lenders around. So, if you want to make sure as you can possibly be, that the money you save for retirement is going to be there for you someday, and you're never, ever, ever going to lose a dime, you want to look at safe money. Even if you're in your 20s and 30s. Congratulations to the clients I work with that made the decision to get a fixed, that many of them take their old 401ks or IRAs from a previous employer and moved it into an annuity, or money they had on the sidelines, or money they wanted to save for the future and move it into an infinite banking policy. They're feeling pretty good right now because a bunch of people are panicking out there, and they don't have to worry about it ever. 5, 10, 15, 20, 30, 40 years down the road, money's going to be there. It's going to be a lot more than they had before. So they had to grow in all those years. And now they can get an income for life, guaranteed, never run out of money. And if they're in a life insurance policy, they can take that money tax-free. So all of you listening to this video, you should have a good portion, if not most of it, and maybe even all of your nest egg money. And any money you want to keep out of retirement, but you want to keep it safe and growing, needs to be in safe money. And you want to give me a call and see how it could work out for you. So, again, don't panic. Take care of yourself. And consider how safe money might work for you. Now, if you're self-employed or you have a business, I want you to listen to me, please. When things like this happen, a lot of times things get really tight with the banks. In 2008, it was bad. Small businesses was really hurt because they couldn't get their hands on money. I don't want you to be self-employed or have a business and have to worry about borrowing money. So if you fund an infinite banking policy, you create your own private bank. Now this is important, folks. So that over a period of time, that cash value grows and grows and grows, and now it's available to you through loans. I mean, you might get to a point where there's $100,000, $150,000, $200,000. For the average family out there, having $50,000, $60,000, $70,000 is all the money you need to borrow for the rest of your life on things like cars or vacations or college or whatever. And every time you borrow from your insurance company and pay it back to them, you pay interest to the insurance company. Guess what? You're a part owner of the insurance company because it's a mutual company. That's a profit center for the bank. And so you get to share in the profits because you're going to get interest and dividends. Plus, as you pay that money back, the cash value continues to grow every year. So you're basically capturing that interest that normally would get paid to the banks. It stays in-house with your insurance company and in your cash value. This is very, very important for the self-employed and small business owners. Because if banks tighten things up, you don't have to worry about it anymore. You're going to get to a point where, hey, I don't have to worry about it. I can borrow against my policy. I have the money I need. And that's important. Very, very important. And on top of that, if you use infinite banking as a major part of your retirement, it becomes a self-fulfilling retirement because remember, it is a life insurance policy, so it does have to have a death benefit, although we, again, minimize the cost way, way down. So as you're going through life, if you unfortunately pass on prematurely, you're going to leave behind a rather large death benefit going to your spouse and your family tax-free. So that keeps your family whole and helps fund his or her retirement in the future. That's something a 401k or IRA can't do. So a lot of good reasons to be in safe money. Again, even if you're young, you want to put 10, 20, 30% in the market, fine. The rest, put in safe money. It's always going to be there for you. Because there's going to be some young people that you may be 25 or 30 or 35. Listen to me. This coronavirus might cause you to lose your job. Hopefully you won't lose your job. But if you do, you probably don't have very much savings because most young people don't save. So then you're going to hit your 401k for money. And now that retirement is gone. You'll take the penalty. You'll take that money because you need to make the house payment or the car payment or whatever. Had you put that money in a infinite banking policy during that time, cash would be there that you could access without penalty. Get you through this. Just saying. So even for young people, it's a good idea to look at safe money. So just to wrap things up, hey, we're going to get through this just fine, folks. Take care of yourself, your hygiene. You want to start taking on some vitamin C. You want to start eating clean. You want to do everything in your power. You can take airborne tablets and they're fizzy things you put in your do whatever you can to boost your immune system. Use your alcohol and anti-bacterial stuff, all that kind of thing. Watch your contact around others. And you're going to get through this. Stock market's going to recover. I personally believe recover quicker than it has in the past because of our strong fundamentals underlying our economy. But you need to start thinking about safe money. Because what we're going through today will happen again in the future. Stock market's going to go up and it's going to come down. It's going to go up and it's going to come down. And what you have to worry about is what your person is going to be when it comes down. Because the baby boomers in 2008 in their 50s were decimated because they lost their jobs. And who's going to hire them after they're 55 years old? And they didn't have the kind of personal savings. Everything they had was in their 401k. Everything. That just went down 40%. They couldn't get hired. And now they had to live off of their decimated 401k. I watched it. It was bad. Well, if all that money would have been in an infinite banking policy or a fixed annuity, and the stock market went down 40%, they wouldn't have lost a dime. And the money would have been in it. Even if they had to live off of that IRA funded by an annuity, they wouldn't have lost 40%. So that's it for now, folks. God bless all of you. God bless America. God bless the President of the United States as he shepherds us through this national emergency now. If you want to talk to me about the options and safe money, I'd be happy to show you how it could work for you. That's it. Hope to talk to you soon.